So often when investing, you have a sector that you're interested in. So what I thought I'd do today is just give you the approach I use just to look at a sector. So gold right now is a hot topic. People are buying gold bars. I'm aware of people trying to buy gold and put it in vaults. I'm aware of people buying gold futures, gold related stocks, uh, gold indexes, gold ETFs. So personally, I would never buy a gold bar. They are you have huge risk factors. If people know you have gold bars, you're a target. Your personal security if you have them in your house. Gold is very heavy, so how are you going to carry it? I think they're buying them as they call it like an insurance policy or like an Armageddon policy, but it's they're incredibly heavy. How many are you going to carry? So I really think it's a poor currency if that's your intention. Whereas buying them electronically, the ETFs, the futures, gold-related companies, yeah, okay, now you've got something. Yeah, I disagree quite strongly with buying physical gold, but I know people want to do it, no problem. Up to you. Just me personally, I do not buy any physical gold. Right, so first thing I do, we're going to jump on some charts and we're going to see what the price says about gold, because the rhetoric in the papers will be whatever clickbait narrative they can come up with. That's what they'll run with in the papers. But you've got to cut through that and see what the price is saying. So let's have a look. All right, so this is the S&P 500. So let's go to, we're interested in gold. So let's look straight at the gold ETF. Here we are. Now, first thing I like to do is get a real look. Okay, now you can see, if we scroll back, gold can go, this is 2019, and this is 2015. So that's 5 years of going nowhere. Just something to be aware of. Then it breaks out, forms a new range here. I wonder if I can draw some boxes. And again, for another 5 years, it goes nowhere. Now, a lot of people are like, oh yeah, I can easily hold a position for 5 years. It is not easy. Holding it for 5 years, going nowhere. Even so, the top price was 192, the lowest price was 152. Holding that for that length of time is actually incredibly hard. Okay, so since then, again, we've broken out and we've gone from 190 to 269. Now, I don't care what you say. Say if you want to tell me that gold is a great investment. It's terrible. It's gone nowhere. Compared to a stock, this is dire. But people like it in their portfolio. That's the crux of the matter. So I'm just going to see if I can draw a box. I'm sure there is a way. No, it's just all the crazy lines. Rectangle. Here we go. So look, here's your first box. Can I sit that there? Okay. And then here is, so that's where it went nowhere. And now let's see if we can draw another box. Here's box number 2. So, and now we're up here. This is totally normal gold. So for me, it's fine. It's breaking out new all-time highs. I have some gold in my portfolio, but I am not a gold bull like a lot of people right now. Let's look at GDX. So GDX is the gold miners. So these are the guys that are exploring the gold. Again, over a long period of time, gold miners, so this is various companies all into one ETF. You can easily search up who are the constituents of this ETF by just either on your favorite AI engine or on Google, just VanEck gold miners ETF constituents, and you can find all the companies that are in here. But you can see from this price chart, it's really gone nowhere. Now there's another ETF, GDXJ, I'm aware of. This is junior gold miners. Again, price has gone nowhere. Okay, what else have we got? There's a company called Barrick Gold. It's this one here, Barrick Gold. Again, price has gone nowhere. So do you see, even though the price of gold has gone up, the related stocks, the miners, the junior miners, and this company, Barrick Gold, have not gone anywhere. So XAU is a handy three-letter word to know, because that also means gold. And generally, it's this one here. It's gold as a foreign exchange, basically. And that's how XAU to the dollar looks, very similar to the gold price. So that's another one to be aware of. There's the future, which is /GC. This is gold futures. It's not loading. Oh, there we go. It's up. Hang on. GC. I'm not sure why it's not loading the chart. Okay, we'll crack on. NUGT is a gold miners index, and it's 2 times leveraged. So look at this. So gold miners haven't gone anywhere, and neither has the leveraged ETF. What do we next got? KGC. This is Kinross. Oh, sorry, wrong X. KGC. KGC. Kinross Gold Corporation. Now, this one does have a better price chart. It's just made all-time highs, but boy, has it been a struggle. So I find this really interesting, that even though, this is Goldfields Limited, even though gold is at all-time highs, the miners are not. So for me, that is a real reflection of gold. Okay, one of the big ones, that was GFI. NEM, Newmont Corporation, really big gold company. Again, price has gone nowhere. This really isn't compelling. Do you get where I'm coming from here? Now, this is Agnico Eagle Mines. Again, New York Stock Exchange. Oh, look, they've just made all-time highs. Okay. Next stock, FNV. Yep, gone nowhere. Next stock, RGLD. Royale Gold. Again, really gone nowhere. So if you'd been a real gold bull for all these years, yes, you may have got somewhere with the price of gold. But everything related, let's say you'd gone down that route, you'd have got nothing. See, so just be aware that gold is very likely, after moving out of its, so right now it's on its next phase in finding new prices, and then history would suggest that it has this huge 5-year block of going nowhere. And again here, second 5-year block going nowhere. So just be careful that you're not wasting your money. Gold does not pay interest. It has no right to appreciate. People say it's like a hedge, inflation hedge. Well, show me the inflation hedge here. We get 5%, 6%, this last year, 30% inflation. Show me it on the chart. Where has the annual inflation protection been from gold? It's just nonsense. I really find the narrative nonsense. Let's see how far we can get back. Okay, let's go back. We'll just make this chart, we'll just change daily to weekly, just to have a bit more in here. Okay. All right, so they started this ETF in 2005. So price climbed. We can stretch this out a bit. There we go. Price climbed up, hit a high of 183-ish, came all the way down to 100. That's a big drop. Stagnated from, we can actually increase this box. From 2013 to 2019, the price went nowhere. And now again, 2020 to 2024, price went nowhere. So just when you're putting on your gold bull hat, saying, you know, gold to the moon, I think you're falling for the narrative. There are many a stock that has a much better, is a much better place for your money. Like I said, this isn't interest bearing. It has no reason to go higher. There's no earnings. There's nothing behind it. There's no company. There's no technology. There's nothing. And this really shows that quite markedly. My only argument would be for a gold bull case is, let's say gold was suddenly involved in some kind of technology, in some chip design or in some product. I can then see a bull case for gold. Gold is a store of value in vaults and people buying blocks of it to put down the back of their sofas. Yeah, for me, it's an empty trade. There are many, just from this brief look, there are many better opportunities than gold. That's the kind of analysis I look at. Jump on the chart, see what the price says, see what the companies related to are doing, and really for me, this is an uncompelling market. That's it.